Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 22 years ago, way back in 2003. Think about that. To provide advanced technical analysis, market commentary, trade ideas, and my passion, which is developing mechanical trading systems algorithms, which we have a slew of here. If you're not a subscriber to Breakpoint Trades, consider subscribing. We have an active community. You get access to our amazing mechanical systems. We have 5 detailed market newsletters per week, actionable trade ideas, you name it. Really good area. If you're just a YouTube subscriber, I think you'll be impressed. Okay, got a lot to discuss. It is the weekend, May 18th. I'm going to do my comprehensive technical analysis of the markets. And this is our backend recorder for our website subscription service, which I'm going to go ahead and start right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone's had a wonderful weekend. It is Sunday, May 18th. By the way, my mom's birthday is tomorrow, and mine is the 24th, and my daughter's is May 8th, so a lot of us got it right in this area. Anyway, hope everyone has had a wonderful weekend so far. It is May 18th in the afternoon, about 3:40 Central Standard Time, and this is the, again, extensive technical analysis review of the markets weekend edition. Okay. This newsletter is divided into 9 major sections. Same general theme as I always keep. I have my opening discussion here, talk about some administration things like some of our systems, mean reversion. We actually have the SPY breakout is in a first entry long. I'm going to talk briefly about the high performance KISS systems where we get into the general market indexes. We do a top-down approach from the monthly, weekly, daily, intraday. And we'll look at the bond market. We'll examine sectors. We'll look at bunch of commodities from crude oil to the metals to currencies, crypto, Bitcoin, precious metals, gold, silver, platinum, palladium, and we'll review some recent trade ideas. Okay. And again, if you're new to Breakpoint Trades, these weekend newsletters tend to be very comprehensive. They're not for the short attention span TikTokers. These weekend newsletters take anywhere from about 40 minutes to 50 minutes, so quite comprehensive. So sit back, listen, and learn. Okay. As you know, market once again had a nice follow-through rally last week. The S&P 500 gained 5.3%. or about 300 points for the week. The NASDAQ gained 7.2%. Those are big gains. All the 21 market sectors we follow were strongly up, with semis leading, which gained 10.2% for the week. Addressing the elephant in the room, as you know, on Friday, about an hour after the cash market close, Moody's downgraded the U.S. debt from a AAA to AA1. Okay, and as a result, in after hours in the cash market, the indexes were down about 1%. Now, we are looking at a gap down here this evening. There's weekend betting futures, and they've come back a little bit, but we'll see where things open. It's quite funny, and I talk about this here. Steve and I were looking for a pullback in the market coming this week after OPEX. We've had such a run, as you know, from the April 7th lows. We had negative divergence on the 60-minute time frames, intraday time frames. So the market technically was due for a pullback. But it's funny because technically when the market is vulnerable to a pullback, that's magically when you get some sort of news out of left field that triggers the pullback, right? I.e. that Moody's downgrade. So we were looking for a pullback anyway, and then you get the downgrade. So my bias would be for some sort of pullback, ABC, 3-wave pullback in the market. I'm going to talk about that more below. Other things, US dollar gained 0.8% for the week. Bitcoin was mostly consolidation week. Commodities were slightly up, but mixed bag on a lot of commodities. Now, the precious metals were all down strongly. Gold down 4%, for example. GDX, the mining stocks, down 8%. That said, I think gold's near a bounce area after a 3-wave pullback. Bond market, we want to keep an eye on the 10-year, 30-year Treasury yields. They continue to push higher. And as far as news this week, it's a light economic news week. Most of the earnings have been reported, but we still have some stragglers for earnings, right? As far as economic news, we have mortgage applications, S&P 500 global PMI, home sales, and anything that could come out of the tariff front. Okay, so let's go and get started here. So first chart below, item number 2, just want to show this quickly. So here's a 60-minute chart of the S&P. Got shown this wedge-like pattern. Again, it's not an ideal wedge because of some of this open space here, but you can clearly see the 5 waves, and this is what we've been following. We've had a heck of a rally from that April 7th low, as you know, and one thing Steve and I were looking at late last week was a pullback to new highs that would set up a MACD divergence. You can clearly see the MACD divergence here and this potential wave 5. So because of that, Steve and I were looking for a pullback after options expiration. Especially these days, the market's really tied to the option market, and it's after the options expiration is when you typically get your reversals. So we were looking for a pullback anyway this week. Steve and I bought some inverse ETFs late Friday. And then, of course, we get that Moody's downgrade. It's kind of funny how that works. But anyway, on the 60-minute wedge here, if we do break it coming Monday, one potential target area would be filling that open gap. There's an open gap way back here in April, but I don't see that being filled. If we were to fill that, then market would likely retest the lows. But otherwise, this first gap up here down to around 56.60 could be a magnet here over time on a pullback. Next, I want to talk about one of our mean reversion systems went long early last week. I think on Monday it was the SPY breakout, which you see here. And it's really not a mean reversion. I just group it with it. And the name's just like it sounds. It buys breakout conditions. It's not buying pullbacks, oversold conditions like most of the mean reversion systems. So this system is still long. Profit factor of 8.4 on this system, 139 past trades, about 77.7% winning trades. Decent profit curve. Average hold time has been about 24 days for winners, 14 days for losers. That said, I bring this up because it is long. The market, we are looking for a pullback in the market here. So just letting you know. That said, it looks like there's a fairly tight stop on this. So it's possible this could stop out on a pullback if we get it early this week. Again, I will send a trade notification email to all subscribers letting them know where the stop is and if it stops out, okay? But it is fairly protected with that stop, so we'll see if that gets hit or not. Next, let's talk about the high-performance KISS systems because they've done very well, okay? I talked about this last week a little bit, did a little rant. But as you know, the high-performance KISS systems, or the KISS systems in general, are long only. They don't short. Now, I do have some versions that will take inverse ETFs, but and those are I'm planning to add those to the website. We're getting close. Haven't done it yet. But otherwise, all the KISS systems are long only on long instruments. Okay. During the pullback correction on the market from late February to early April, we did have some of the index-related instruments, the ETFs, some of the market-related stuff that follows the market, took some whipsaw trades. All right. Again, to be expected because they're long only. That said, if you stuck with the KISS systems, you didn't give up on them because you had a couple losing trades, they're up very nicely now. So here's an image I took from the website. You can see Tesla, the 130-minute system's up 37.7%. Again, you can see the previous trade it lost 5%. But if you were scared and you didn't do the next trade, that next trade made up for that last loss by sixfold, right? QLD's up 37%. The last trade lost 4.7%. Big deal. Cares about that little losing trade. That's why if you're going to trade systems, guys, you need to trade them long enough. You can't take a losing trade or two and then say, oh, system doesn't work and give up. That is not being logical. You need that when you trade systems, you need to have a plan. Steve and I always ask, what's your plan? What's your trading plan? And part of that plan here, if you're trading systems, is how much money you allocate to the systems, and you don't be emotional about it, and you got to take every trade, okay? You can't be taking 2 or 3 trades and make big conclusions on the systems. Otherwise, you're going to underperform. But you can see all these nice gains here. Bido's up 30%. Last trade lost 9.8%. But this trade has made up by threefold. UPRO up 30%. Last trade lost 7.8%. So the point is, really nice trades here on the systems if you stuck with them. I know last time I discussed, one of the subscribers traded the systems, took those whipsaw trades in March and April, and then gave up. And so he missed out on all this nice performance gains. and he just kept the losses because he gave up after a couple losing trades. You don't want to do that, guys. I've been through that. I understand, but when you trade systems, again, I know I'm like a broken record. Decide the amount of capital you're going to allocate to them, and you got to continue to trade them. You take every trade. Okay. If you're, if you're not doing it, if you're doing them willy nilly and you're skipping trades and stuff like that, you're going to underperform, and you might as well not even take the systems. That said, I do have some big updates coming here. I have some model portfolios I'm going to potentially make. I'm going to add the inverse ETF, so stay tuned on that. But really nice gains here. And image number 5 below. So here's an example of some of the index-related high-performance KISS systems. So you can see the SPY 78 minute on the left side. There was a losing trade there in late March, early April. But then the system went long on April 7th there. It's been long the entire time. It's up. That trade's up 17% from that entry. Market isn't up 17% this year, is it? No. So, heck of a trade. QQQ 65 minute. You could see that nice losing trade back there in March. But then it went long on April 9th there. It's still long. That trades up nicely. SPY 130 minute. Same deal. Got a couple losers back there. And here, it's got a winner. And on the BIDO trade, you can see that's Bitcoin. You had 2 losing trades back there in early March or early April. And since then, it's been long the entire time. And that trade is up about 30%. So, again, overall, guys, I understand, sometimes trading systems can be a little difficult, especially if you're newer, especially if you take a losing trade or two, but you got to stick with them. The high performance KISS systems have anywhere from 70 to 60% winning trades. Some of them are 50%. And so they take quite a bit of losers. All right. It's all about the collective average. That's why you have to do them long enough. Anyway, enough about that. But overall, they've done well catching this uptrend off the April 7th lows. Next, back to the general market. So item number 6 below shows the index sector table, what transpired last week and on Friday. Again, Friday was another update and options expiration. That said, like I said, Steve and I were looking for a pullback coming this week, well before the Moody's, just because everything was set technically. We went short, then we got the Moody's downgrade after hours. So we'll see where things open at on Monday. We'll see where futures open at this evening. But you can see heck of gains for the week. Heck of gains for all the sectors here with semis leading. But big gains across the board. US dollar up 0.8%, another big move. Crypto, like I said, Bitcoin was mostly consolidation week because it had moved prior. That said, Ethereum's been quite strong here, up 2.3%. Commodities were kind of all over the place here. Crude oil was up 2.25%. That accounted for most of the gains. Uranium up, but natural gas down almost 12%. Corn down, coffee, sugar. Precious metals all smacked, as you can see here. But I think they're due for a bounce. Okay, which we'll get to below. And as far as the bond market, continue to see movement higher in the 10-year, 30-year Treasury yields. We want to keep an eye on that. If rates continue going up, that could start spooking the market a bit. And finally, item number 7 is the economic news count. Like I said, very light news week. We have S&P 500 global PMI on May 22nd, new home sales on 23rd, mortgage applications, leading indicators on the 19th. And again, a lot of the big companies have reported, but there's still some stragglers there as well. Okay, let's go and jump to the index charts. So first chart below, item number 8, here's the Dow weekly up 3.4%. Again, as you know, on April 7th, it tagged to that big support area where it found support. Okay, perfect technical analysis, nice move up. And again, still well off those highs, double top highs. This area is a logical area for some sort of pullback. Now on a pullback on the indexes, I'm looking for maybe a retest of the 200-day moving average or the 50-week moving average. Okay. Next, number 9, here's the daily Dow. Again, so far, I showed this labeling last week. The bullish view here is you have wave 1, 2, and we're working on a wave 3. So eventually we have a pullback in a wave 4. Then we go up again in a wave 5. All right, but right now we're in a little supply zone here. So again, on a good pullback here, there's an open gap here. You have the 50-day moving average, stuff like that could be targets. Next, moving on to the S&P 500 chart, chart number 10. Here's the weekly view, up 5.3%, big week. It's now in this underside of this little supply zone. Again, big rally out of that demand zone from April 7th, which was very close to that uptrend line for the 2020 lows. Okay. Chart number 11, here's another weekly view, just a zoomed in view so you can see that demand zone that we tagged, bounced off of it, and now we're into a little bit of supply. Next, chart number 12, here's another weekly chart. So someone asked me what wave count would allow new highs. So this is that wave count we've showed before where this pullback was a big wave 4, and it doesn't overlap this wave 1, so this would be your bullish labeling to make new all-time highs. That said, what I don't see is a rally straight up to new highs. I'm looking for some sort of correction here sometime soon, like some sort of ABC pullback, then another rally higher for wave 5. Next, look at the big picture chart, chart number 13. Here's the monthly view, showing back to the 2008. Remember, we've been in a secular bull market this entire time, 16 years. So this is one way to label it. Again, there's other ways to label, but this shows you the ongoing bull market. The next good rally to new highs, though, could be possibly completing some sort of wave 5. And so that's something to be aware of. Could be completing the bull market. Okay, but I expect new highs ultimately. And we're still in this uptrend channel that we've been in for 16 years. Next, chart number 14, here's the S&P 500 paint dry system. Like I said, affectionately watching paint dry because these trades can last 2 or 3 years or longer at times. The system keeps you in long-term bull markets, keeps you out of bear markets. You could see like 2008, tech bubble crash, stuff like that. And in early April, it was looking to exit here. There was the indicator. It's a monthly chart. So the system makes its decision at the end of the month because it's a monthly system. And it was looking to exit, go back to cash in April. But then the market rallied up hard enough that the system decided to stay long. So no changes. The system is still long from that last entry there in late 2022. Next, chart number 15. Here's the S&P 500 KISS system. This is the high performance KISS on the daily. Again, it went back long. No changes here. Smart trailing stops 53.81 approximately. Again, I'm looking for a pullback. I think would at least test the 200-day moving average, maybe even the 50-day perhaps. But then I'm looking for a higher low and a push again. Next, chart number 16. Here's another version if you wanted a tighter stop. So this has a stop way up at 57.41. So if you wanted a tighter stop, just below that 200-day moving average. Now, which of these two have the better statistics? The one above clearly has the superior statistics by far. So much higher profit factor, winning percentage, etc. But this one has a tighter stop, so just showing both. Next, image number 17, here's the 4 time frames with the ATRs and the ribbons and the cycles and the DeMark. So, we're just continuing to ride these ATR on all the time frames. That said, you can see a little DeMark 9s, DeMark 13s, stuff like that. So we are getting pretty stretched. Moving back to the standard chart. So chart number 18, here's the daily chart. So again, heck of a rally. We're now back into another supply, right? So far, the bullish view would be wave 1, 2, and we're working on a 3. So a pullback sometime soon would be some sort of wave 4. Next, chart number 19, here's a half-day chart. This shows you some of these gaps. Like I said, this gap way down here from April 21st, unless we're going back to the lows, I don't see that being filled anytime soon. But this gap up here could be a target on a wave 4 pullback. Next, chart number 20, here's a 2-hour view with some fibs. Again, it depends where you want to draw the fibs here, guys. You want to draw the fibs from the higher low at 51.01 or the April 7th low. But if you draw it from here, notice your fibs and that open gap area could be your target. You do have some MACD divergence. Chart number 21, here's the 60-minute view with that wedge pattern that I showed early on. And this one has the fibs back to the lows. So 38% fib comes in at 55.30. Next, look at the NASDAQ, chart 22. Here's the NASDAQ KISS High Performance System. Had a new smart trailing stop on Friday, moved up from 465.70 to 482.80. So this has a nice tight stop, and notice it's above a little bit, slightly above that entry. So it's protected, gains are protected. Next image number 23, here's the 4 time frames with the indicators. Again, pretty much identical to the S&P. Watch the ATRs. Notice a bunch of these DeMark 9s, 13s, stuff like that. Next, chart 24, here's the NASDAQ weekly, up 6.8%, 6.9% for the week. It is testing this broken channel line, so that's another resistance area. So logical pullback off of there would only be logical. In technical analysis, when you backtest a broken trend line, it often becomes resistance. Next, chart 25, here's the standard daily triple Qs. Again, just like on the other indexes, you can have this potential 1, 2, wave 3 up. So looking for a wave 4 pullback here sometime soon. Notice that big open gap below. And chart 26, here's a half-day chart, just shows you the gap, shows you a demand zone down here as well. Next, chart 27, here's the 2-hour view. Now this has a little Elliott wave breakdown. Again, guys, don't get too bogged down into this stuff. I know Steve gets nervous when I show these sometimes, but because there's always so many different variations of Elliott wave. But, this is just one option. This option, I could see a couple different things. Number one, I could see we could either have a wave 5 here and we get a deeper ABC. But the way this is labeled a wave 5 of 3. So what this could be suggesting is we get a pullback here, but it's simply a wave 4, again, in parentheses, right? So it would be this to this degree, and it's not that deep of a pullback. Then we get another rally to a new high to complete wave 5 of 5. Then we get our deeper ABC pullback that likely fills at least one of these gaps. So that's an option that we could see where we just get a minor pullback here, then another push up again one more time. Then we get a better high. And finally, chart 28, here's the 15-minute view. Again, been working higher. We'll see how this opens come Monday. And finally, chart 29, here's IWM small caps. So they closed up on Friday, just a little bit above that 50% fib. They had a traditional 5 waves down, as I've been showing, unlike the other indexes, which were mainly 3 waves. So, and still well below their 200-day moving average. Chart 30, here's the 2-hour view. Nice move from that coil pattern from April, which we showed. And we still have this supply zone above, so another push, that could be a target. And that does it for the indexes, guys. So let's go ahead and move on. Let's look at the bond market. Chart 31, here's the 10-year Treasury yield. As you know, this has moved up nicely, pulled back off this little resistance trend line. We'll see how this reacts this week. We want to keep an eye on rates. A lot of people are. Next, chart 32, here's a monthly view of the 10-year. I showed this last week. This could eventually break to the upside in this wave 5. Now, that would lead to a bigger market correction later on. But remember, this is a monthly chart, guys. I mean, this could chop around in this coil, for most of the year. So, but just this is a bigger picture thing to watch. Next, chart 33, here's high yield corporate bonds. Now, they have been leading to the upside during this whole market rally. So they were one of the positive bright spots in the market, and they are at new highs. Now, it does have a gap here below that probably would be filled here on a pullback, but they've been relatively stronger than the indexes, and the indexes tend to follow high yield corporate. Moving on to some indicators, chart 34, here's the VIX. The VIX has been melting down. We got a couple gaps here, but notice my comments here. I say the VIX needs a bounce to cause the lower Bollinger Band slope to flatten out. You see how the lower slope is pointing down pretty aggressively? So the VIX is really unable to get below the lower Bollinger Bands on a closing basis here because of the slope here. So a pullback in the market would cause the VIX to bounce, and then the lower Bollinger Band slope would start curling, flattening out. Then that would allow for a time in the future for the VIX to come back below the lower Bollinger Bands and possibly give us a good short signal. So something to watch for. And chart 35, here's a 60-minute chart of the VIX. So this is something we were watching last week. We were looking for a new low in the VIX to maybe test this big support, which we got. And we got a pretty good MACD divergence there. So this could be an area for the VIX to bounce. Notice you got a nice logical open gap above. Gaps, the VIX loves to fill these gaps, so filling that gap would allow a pullback in the market. And chart 36, here's the NYSE. This is the breadth thrust indicator. Remember, we had a confirmed breadth thrust on April 24th. This indicator went from overbought to oversold to overbought within 9 days. And in fact, it was 9 days exactly. That's part of the rules here. It has to occur within 9 days. So that was bullish. That occurred right in here, and market pushed nicely higher. That said, we do have some divergence now showing up here, suggesting maybe a pullback soon. All right, moving to the next part of the newsletter, we'll review some of the sectors. Here's XLK Technology. Pretty good rally off those lows. Again, we have an open gap below, just like on the other stuff. Not too far from the all-time, from the recent highs. Chart 38, financials, they've been very strong. Just a stone throw away from the recent highs. Again, after a simple three-wave ABC pullback, really good rally. Next, chart 39, transports. They've been lagging a bit, but they're above their 200-day moving average now. There is a little supply zone here. And on a pullback, notice you have that gap below. Next, chart 40, industrials made a new all-time high. This is a weekly chart. You got a perfect ABC pullback and new high. So very strong sector. Next, chart 41, XOP consumer staples. Big rally on Friday. This tends to be more of a defensive sector. So if we pull back, we may see this bust out of here. It's right at resistance. Another sector that tends to be a little bit defensive is utilities. They pulled back early last week, then rallied and broke out. Again, that also has to do with rates and the bond market. Next, chart 43, XBI Biotech. This has been lagging severely, as you know, after that rally up to the 50-day, pulled back. Now, we do have a higher low here, trying to find some support around the 50% fib. We'll see if that can hold or not. But otherwise, pretty good depth. Still been very weak. And chart 44, healthcare. This has been quite weak, made a new low, but we now have a divergence at the low. But this healthcare and biotech has really been lagging here. And chart 45, real estate, IYR, recovered the 50-day, coming up right at the 200-day moving average. Keep an eye on rates because that strongly affects this. And chart 46, XHB, home builders. Remember, back on April 7th, this perfectly back tested that previous resistance turned support. Finally, looking at the energy market, chart 47 XLE broke out of this little pattern. There's an open gap here, almost filled the gap. We got another gap as well. A lot of gaps here. Crude oil has been very choppy here. Honestly, the energy stocks have hung in here fairly well considering. And here's the weekly view of XLE Energy. Remember, on the lows, we tested that 200-week moving average. It's always a big, important support area. Rallied up, but to me, this looks like it could form a lower high and at least consolidate again. And finally, chart 49, oil services, broke out of the little pattern I showed over a week ago, filled that gap, pulling back here a little bit. And as far as the world market, guys, as you know, they've been super strong. I think these are going to outperform in the future. EFA's been a V rally up. Look at this thing. This is Europe, essentially, just straight down, straight up. Now, it is getting quite extended. Look at the divergence on the RSI. So don't touch it here, but longer term, I like this area. And remember, we have a couple KISS systems for EFA and EEM. Next, moving on to commodities. Chart 51, here's DBC, the index, up 0.3%. Like I said, still in this range here for the last 2+ years. Eventually, it'll break out of this range, and when it does, I think it's going to be a powerful move. But we're still in the range. Chart 52, here's the daily. Again, notice this three-wave bounce back to previous support, became resistance. Next, chart 53, crude oil, up 2.4% for the week. But remember, lost that shelf support, so that is still resistance. And chart 54, here's crude oil on the daily. Again, you can see that shelf support, which became resistance. We had a double bottom here. If crude oil can get up here, we'll see if it can next time break through this resistance. That would be a positive. And Chart 55, natural gas down about 12% last week. So nice pullback. Hope you took your profits up there from, remember I gave a long trigger back here in April. Now watch the 200-day moving average again. When it regained the 200-day moving average, that should now act as a support. So we'll see. Chart 56, copper, just continues pulling back here the last few weeks. Just chopping around. Chart 57, DBA agriculture. Again, perfect ABC three-wave pullback into the 200-day moving average in early April. That was a good buy. And so far, it's been holding these moving averages, 20-day, 50-day. So we got a nice higher low there. Good area for a swing stop at that higher low. And Chart 58, uranium. It's been super strong. Finally pulling back a little bit on Friday. We'll see if it now retests the 200-week moving average, or 200-day moving average. I'm sorry. Moving on, crypto. Here's Bitcoin. Again, remember Bitcoin had that rounded top back in December and January, which we identified. That played out for a good 25% correction down to the demand zone. Found support there. Rallied, broke the downtrend line, rallied all the way to resistance area. So it's been a good trade, but logical to stall here a little bit at this resistance. And Chart 60, here's Ethereum. Had a powerful move out of this little coil to the 200-day moving average, now pulling back, but was a heck of a move, heck of a trade out of that. Some of the Bitcoin crypto stocks, WGMI, one of the Bitcoin miners, been a heck of a trade out of this wedge. Excellent move, continues higher. 200-day moving average is just above. And Chart 62, MicroStrategy has been another good trader, especially off that 200-day moving average. KISS system did outstanding with this. So next, currencies, US dollar, Chart 63, dollar up 0.75% for the week. Remember, it found support in that demand zone. Big sell-off from that supply zone, of course, at the beginning of the year. Chart 64, here's the daily version. Last bounce stalled at the 50-day moving average. And the bigger picture chart of the Dow, this monthly chart, we're still in this channel. This uptrend channel from 2008 lows, that's your big major support. That said, I do believe the dollar ultimately will work lower. These other world currencies look like they went higher, like the Japanese yen. You had a perfect textbook falling wedge, breakout, back test. And to me, yeah, it consolidated so far this month, but this doesn't look done. This longer term, this looks like it wants to push higher over the long run. And here's the daily Japanese yen. You can see the last high stalled at the September high of last year, but it looks like a big cup and handle potentially that it can form. So over time, I believe the dollar is going to work lower. And let's move to precious metals. Chart 68, gold down 3.6%. Remember, we had that blow off move to 3,500 and was the wave 5 and that parabolic uptrend. So nice pullback. That said, here's the daily chart of gold. And as I said, gold to me, I think is going to bounce here. You have ABC three-wave pullback. Now there is a demand zone down into here, but I think it likely bounces here. That said, could it go and make a new high? It possibly could, especially if things were to really unravel around the world. You have a bunch more uncertainty, but I think we're going to rally here, maybe form a lower high instead of making a new high. But again, we'll go with whatever happens. And Chart 70, here's silver. Silver's really just been a consolidation pattern for many months. Hasn't moved like gold, still in this range. And here's the big picture monthly view of silver. Like I said, it's been stalling into this supply zone all last year and into this year. Some other commodities I'm interested in. Here's palladium. I've been talking about this. Palladium's really basing out here. It's got about a 1.5 year base now. Notice your moving average ribbon. It's really flattening out here. So the base is building. Eventually this is going to work higher out of the base. But for now, just monitoring it. Chart 73, here's platinum. Remember, I'm bullish on platinum long term. But right now it's still stuck in this weekly coil pattern. But energy's building. And Chart 74, here's the platinum to gold ratio. Like I said, it's down here at 0.3. It's a historical all-time low, never been down into this range. Eventually, platinum's going to have its day. I think it's an easy double over time. But right now, I'm just monitoring it. One thing, guys, is the supply and demand is way out of whack for platinum. the demand is about 2 times over the supply because a lot of mines, about a third of the mines have shuttered. So eventually, supply and demand will matter, but for now, we're just monitoring this. And Charter 78, here's a 60-minute view of platinum PPLT. Notice you got a nice tight coil here, so maybe get a quick pop here come Monday. And Charter 676 GDX, the miners, just like on gold, you have a three-wave pullback. You can notice you're right at the 61.8 fib, so it could be a logical bounce area off of here. But I'm not sure if it's going to go back to the highs, but it may give you a trade here for a lower high. I looked at the individual precious metal stocks. A lot of them have the same look. Here's RGLD, one of the major ones. You also have a three-wave pullback into the 50-day. And Charter 78, Newmont, same deal. You have a three-wave pullback into around the 50-day moving average. But again, I think you can get a bounce trade off of these. And Charter 79, Goro. Now this one is more interesting to me. Lower price name. You got a nice base here forming. So this is maybe one to buy a position in and hold it. But you might want to do some fundamental research on it. It's best to do that on these gold stocks. And the other one that's interesting to me is BVN. You got a nice coil pattern here. Friday bouncing off the bottom of the coil trend line. You could be long here with a stop right below the low of that trend line. Oh, then one more is CDE. That's a silver stock. You have kind of a flag formation here right around the 9 EMA. All right, guys. Now we've had some nice trade ideas in this market. So here's a fundamental play, AZ. Okay, AZ. We held a webinar, and we never do this, guys. We actually held a webinar with the company back in October of last year. The stock was around $2.60, and the stock hit a high of $10 last week. So anyone who bought this and held, you did excellent. So congrats if you did that. I own a big position. Steve owns a big position. Quite a few BPT members do, but again, that was pretty timely when we held that webinar right around that that little base. Next, Charter 83. Here's a lucky one. INZY. I put this out last Wednesday. It triggered on Thursday. Slight trigger. I actually bought it. I liked the pattern, and then boom, Friday it gapped up 178%. They were bought out. Again, completely lucky. I went long, and this was a buyout. So the technical pattern was there. I just got lucky. That happens once in a while. Sometimes the reverse happens, and you get a heck of a gap down. But so hope some of you guys had this. I was lucky enough to have this. Sold it on Friday. No reason to hold it any longer. It's a buyout. Another one we put out last week was United Healthcare. They got absolutely smashed. We pointed out the 61.8 fib was at 250 that's from the 2008 lows to the 2024 highs. Remember, I always call that the master fib. You almost always get a reaction off that fib. Plus, you're in a big supply demand zone. Well, if you bought around there, you had a great trade so far. And here's the daily. So far, nice percentage move if you bought around that 61.8 fib. And it's still below its lower Bollinger Bands, so this could still work higher. Here's some others. AMD, nice move after breaking out that downtrend line. Charter 87, Oklo, another one, really nice move over this trend line. Charter 88, INDI, another one, nice move, low price stock over this 210 resistance, nice percentage gainer. Here's an AI play, Sound, another nice move out of that base. And one of the stars has been this HIMS. Had it back here in April out of this coil pattern. And man, look at this move, guys. And I sold it way, way, way too early, like a dummy. So hopefully the rest of you weren't dummies. When something really gets it on momentum, it'll typically ride the 9 EMA all the way up so that you can always trail the stop just a little below the 9 EMA. And if you've done that, you're still long. This looks like it's maybe going to form a big cup and handle now. Charter 91, FSS, another beauty out of this nice trend line resistance. Now it's back. Now it's up to a supply zone, so take some profits. Charter 92, BTU, coal stock. Nice move out of the tight coil here. I'm still thinking this could push again now, so I bought a little more. And we'll see if it can push up. Maybe we get to the 200-day moving average eventually. Charter 93, RZLV, nice one. This gave us two trades. He gave us a trade on their first break, Then a trade on the back test. I like buying the back test because I have a tight stop. And I'm hoping this can push again. I own a position. Jabber 94, woof. Um, Here's one that hasn't triggered yet, so one to watch. I did not look for any new ideas, guys, just because the market looks a little vulnerable for a pullback. So, again, we'll see what happens with the futures here tonight. And, again, thanks for all your support, everyone, and enjoy the rest of your Sunday. Take care.